Welcome back to Trader UK, the money management channel. Today, of course, is the day of the US election. I'm back to take a look at how the markets are behaving, how my portfolio is responding to this, and where I'm seeing value in this market. If any of you hold any positions in the UK travel or hospitality sectors, then I've got something interesting for you to take a look at a little bit later on in the video. And just note that the results of the US election haven't actually been announced yet. So I'm not taking that into account at this point, although it sounds like we won't actually know the final results straight away. Before we do get going, if you could do me a favor and like the video, subscribe to the channel as well for more similar content. We're actually sitting somewhere around 900 subscribers at the time of making this video, so every subscriber counts. Hopefully we'll reach the 1,000 mark fairly soon. Now I'm going to switch across to my iPad and we'll take a look at some of the news articles that have been coming out over the last few days. Now, Friday of last week, you'll probably remember, was not the best day for the markets in general. In particular, it was very bad for the tech sector. The tech wreck is what I saw some channels calling this. We saw big downward movements for a lot of the biggest names listed on the NASDAQ. That came to light after big names such as Apple, Amazon, Facebook, Google all released their earnings reports. And for me, the earnings were pretty good. They were pretty strong all round. I didn't see too many problems. The only real point of concern was probably from Apple, who reported a 20% or so fall in iPhone sales year on year, but it's kind of expected. They delayed the launch of the new product, so you'll see those sales get wrapped up in the next quarter. But as I was looking at different news outlets, it didn't really seem like the media knew how to interpret the earnings. There were some reports saying how good tech earnings were and tech companies are getting bigger and bigger. And then the next report would be talking about how poor the earnings were. So it was a bit misinterpreted. Either way, we then saw all the big tech companies sustain big losses on the Friday. Now, it definitely didn't help that some of these companies didn't end up giving out any guidance for what they're expecting next quarter, because they just don't know what's going to be happening around the world with lockdowns and coronavirus, etc. There's so much that's out of their control at the moment, so it's quite understandable. But I guess that uncertainty then spooked the investors. But a 7% fall we saw for some of these tech companies in a day, for me, that was a huge overreaction from the market. And then, of course, over the past week or 10 days, we've seen this huge spike in COVID cases all around the world, in particular, though, throughout Europe. We'd already seen a number of countries, including France and Germany as well, going back into what would be some form of second lockdown now. But Friday, it was the turn of the UK, where I'm from. They backtracked a little bit. Originally, they said they want to avoid going into a lockdown at all costs, and it wasn't going to happen. They were going to do it on a regional basis and control it that way, and then backtracked and decided that a 4-week lockdown was necessary, and that will start from Thursday. And then, of course, not to forget this, we have the US election taking place. Results should start coming in soon. I'm not sure what time they'll actually be finalised, or if they'll even be finalised today by the looks of it. Because there's so much postal voting, it's going to be contested and debated and cause a lot of unrest. Either Donald Trump or Joe Biden are going to take office for the next 4 years. We know that much. And usually, I would expect when we have a solid, rational market, that this would be the big news events, have huge influence on the market. But this year, I just don't think it will. And I'm going to explain why a little bit later on. First of all, let's touch on these tech earnings. Now, in my opinion, like I said, this was a big overreaction, if anything, from the market, and this has made for a great buying opportunity. I do see tougher times ahead at some point for big tech companies. There's going to be a big focus on regulation and competition rules, that kind of thing, potentially higher taxes depending on who wins the election at some point, but I think that's way further down the line. In the shorter term, I think we're going to have a huge earnings season this quarter. This Christmas is the online Christmas. You need to shop online. It's November already. People are already looking to do their Christmas shopping, and lockdowns are forcing all non-essential shops to close. So shoppers have no choice but to shop online. And even if they do have a choice, to be honest, they've got the fear over COVID. They don't particularly want to go out in the cold to shopping centres full of people in a closed environment. I don't think it's going to be a busy Christmas or a busy retail time for the traditional retail outlets, but certainly online, yes, if you've got a good setup for online sales, you'll do very well this Christmas. The spend on advertising this year, this is going to be massive. This is where all the money is going to go, in my opinion. Big retailers who are always trying anyway to move as much of their retail or much of their business online as possible because it's more efficient, they're going to want a piece of the pie. You've also got the small businesses who have been told to close down their premises and they can't open physical stores, they're going to want a piece of the pie. And then startups as well. There'll be a lot of startups at the moment. People see opportunity in these recession type scenarios, but I can't imagine anyone who's looking at a startup at the moment is thinking, yeah, I'm going to take a lease out on this premises and open a store. Everyone's going to be looking online and advertising via social media, selling on eBay and Amazon, these types of things. So I think there's going to be big spend on advertising. And of course, the companies best positioned to take advantage of this will always be the same old players: Amazon, Google, Facebook, Apple, these types of companies. Yesterday, I was picking up Amazon at $2,955, which to me is a bargain. Facebook was under $260, Google about $1,600 I think yesterday. These companies are some way off their all-time highs actually. I know they were very overpriced and maybe they still are overpriced, but they're off their all-time highs. They're announcing all-time record profits, so I feel like I'm picking up these companies at bargain prices. This, to me, just looks like a rerun of March and April. We already know what's going to happen. We know who benefits from lockdown situations. And I don't think this time it will be any different. It will be the same companies that do well in this type of situation. So I was very happy to put about £5,000 into the market on Friday and on Monday as well. Next up, let's take a look at earnings. This is the biggest influence on the market for me. Of course, earnings reports and politics have an influence on the share price, but irrelevant of who's running the country tomorrow and irrelevant of whether companies meet or miss earnings expectations, the world continues to turn. People still go to Walmart to do their shopping. The way people spend their money won't actually change just because of a bad earnings report and a new president. However, there is literally nothing worse than if a business is forced to close and told that they can't trade. Even if people want the product or the service that that business is offering, then chances are that they can't get it because the store is closed. So this is why rising cases and fear about new lockdowns or extended lockdowns is having way more influence on the market right now. Of course, the worst case scenario for investors would be if the US enters a second lockdown. And if what we saw a bit earlier in the pandemic is anything to go by, then they might follow Europe's lead. I guess that's kind of what happened before. After all, they are, from what I can see, a couple of weeks behind in terms of cases and the lag and the deaths, etc., the way the virus is spreading. So they have a little bit more time to play with. I have actually read a lot of reports saying that a second US lockdown is pretty unlikely due to the reaction that it would get from the public there with rioting and looting and protests, that kind of thing. Most people feel there would be a lot of unrest, but there's going to be a lot of unrest anyway from what I can see after this election, depending on which way the results go, or maybe if it goes either way. So one way to control that would actually be if they did announce a new lockdown to keep people off of the streets. Of course, it's not going to stop everyone from going out. Some people will still protest, some people will still loot, some people will still riot, but it would help to reduce the number of people to a more manageable level for the police to deal with. But again, a lockdown in the US would only increase reliance on the tech sector like it did last time. We already know this. So I'm still very happy to increase my positions in the tech sector and certainly at these prices. Before I move on from lockdowns, I just want to show you something. This is for the people that invest in the UK aviation space, in travel companies, in tourism, hospitality, these types of companies. Something interesting following from the UK's announcement of a second lockdown. Just bear in mind, this announcement was made by Boris Johnson on Friday after the close of the market. So any movement you would expect, or any reaction, to take place on the Monday, or maybe in after hours. After the close of the market, we know that pubs are closing, restaurants are closing, non-essential businesses, and travel is also banned. You cannot travel within the UK unless it's essential or you're going to work, and you can definitely not travel abroad just to go and take a vacation or a holiday. So it's banned. It's bad news for the travel companies and the airlines. Look at how my travel portfolio performed. This is TUI, one of the companies I'm invested in. It dropped on Monday and rebounded right back up on Tuesday. We've also got Jet2 here, another travel company, airline and package holidays. Dropped on Monday, rebounded on Tuesday. EasyJet, surprisingly, has actually climbed higher on lockdown news. And then Marston's. Marston's are a brewery, and these guys own some bars as well, but they produce beers and alcohols. They cannot sell their product for at least 4 weeks, probably longer than that. And they're going to need to throw away a lot of what they've produced anyway, because they're not going to be able to sell it. No pubs and bars are going to be allowed to open all across the UK, and that's their only market. Theirs dropped on Monday and again rebounded on the Tuesday. That is all pretty strange from companies who are told you can't trade in the UK for a minimum of 4 weeks. You can't do business. To me, that tells you that the hospitality and travel sector in the UK anyway has priced in a zero winter, a worst case scenario, horrific winter, no income essentially. And if we do actually see any kind of downward movement, this could be a time to pick up some bargains. After all, a lot of nations like Canada are now moving away from a quarantine system, and they're starting to adopt test on arrival, which is made possible by new COVID testing that turns around in around 20 minutes or so. It's just a thought, but we're getting closer to a vaccine. In the UK, they've told GPs to start preparing a vaccine administration program to give to the elderly over 85s and frontline workers or members of the NHS workers there. So we're getting much closer to the other side of this now. Just a thought. So what am I doing here with my portfolio at the minute? I'm adding to it. That's what I'm doing. I see this as a good buying opportunity, particularly in the tech sector. I didn't think we'd actually see these prices again. Like I said, I'm not expecting the election to actually have much impact on the market this year, just because of everything else that's going on is going to overshadow it, I think. But it does give us some, if it does give us more red days, then I'll certainly be spending more money. I'm going to be loading up on some of the stocks that I already own. Apple, I would say Apple, anything under 105, I'll be buying into Apple. Amazon, if I see Amazon under 3,000, that's a bargain for me. I have to buy Amazon if it drops below. If I see a 2 and a 9, then I'm buying definitely. And I would like Amazon to be one of the biggest parts of my portfolio. At the moment, I think it's probably Tesla. Amazon took on 250,000 employees in the last quarter. 250,000. That's like the population of a small country. It's crazy. They are expecting a big, big winter. And like I said, I expect them to have a big, big winter. Christmas is going to be massive for them. Facebook. I'll pick up Facebook under 260. Again, advertising spend is going to be massive over the Christmas period for them. And Google, another huge beneficiary. Google's another one alongside Amazon that I really want to increase my position in. They had a good earnings report, but the stock price didn't actually do much after that earnings. It peaked 5%, dropped back down again, and it seems to be pretty flat now. I would say Google, anything around 1,600. If it drops under that, then I'll definitely be adding a ton of Google. That is everything from me today, guys. Let me know your thoughts. In particular, I want to know what people are thinking about the tech sector. Do you still think it's overpriced at the moment? Do you think now's a good time to buy? What are you buying? As always, thank you very much for watching, and I'll see you next time.